streams on incomes. So I'm just going to introduce our first speaker for today. I'm going to break down his bio for you so that you can clearly understand what he will be talking about today. So our first speaker is Khumbudzo Ramatapa, the founder of Tomboli Investment Firm, which is a diverse investment company, and his co-founder and managing director of Scholar Academia Tutorials. He started investing 5 years ago and quickly fell in love with it. He wrote a book called Fundamentals of Stock Investing, which will help guide new investors on how to invest in the stock market. He will be teaching about investing in stocks. He's been serving under Visionary Corner and the Mashele Foundation. So let us clap hands for him as he is about to come forth on stage.
Good morning, guys. Good morning. Everyone is okay and in a good mood because the information that I have for you is very, very critical. Because in this day and age, a lot of people it depends on what salary, right? We grow up, we have this program, wake up, go to school, get a job, get employment, have one stream of income, budget, all those things, right? But you understand that the standard of living is very high lately, right? So, like when you sit down and look at the most successful people, they tend to have a diverse portfolio in terms of stocks, real estate, and so forth, right? All those multiple sources of income, right? Now, a lot of us, especially around in the townships, and we have a lack of understanding or knowledge of what stocks are, basically. So we grow up knowing that stocks is something for the rich people, right? And which is not the case, honestly speaking. Everyone, for me, I believe that everyone here should have some type of stock. You should own stocks, you understand? Now, guys, I'm just going to give you a brief summary. When I'm talking about stocks, you have to look at it in a perspective of I am becoming a business owner. You understand? Now, when you are becoming a business owner, can you invest in a company which is going to collapse? Can you? No. A lot of people like to do stock trading. You understand? There's investing and trading. Those two things are not the same. Because trading is basically me going to the chart. I'm looking at a chart, I'm like, okay, this is the high of the day, this is the low of the day. So I anticipate that the market is going to go high or low. You understand? That is trading. So stocks doesn't work like that. You understand that stocks, you're looking at the long-term investment, right? If for me, in case I'm saying I want to buy stocks, Coca-Cola. I understand Coca-Cola is a big brand, right? It's too big to fail, you understand? So I know that it's a company which has value. So obviously I'm gonna want to buy stocks of what? Coca-Cola, right? Now a lot of people, we just go to there's a lot of options obviously, and there's a lot of companies around South Africa which are emerging, which are dealing with great technology, you understand? So you look at those things and be like, okay, where is the market going in terms of the economy of this economical characteristics of a country or the world? We understand we are going to a metaverse, right? Now, ideally you want to invest in something which is going to be dealing with that. Because you know that in future, the stock of that, let's say per se company, is going to be high. I'll give you an example. Do you remember during COVID? Yes. A lot of companies were closing down, right? Liquidated. Now, if you go to the charts or to the stocks, you look at companies like Amazon, companies like Netflix. The stocks of Amazon and Netflix were very high during COVID lockdown. Why? Because one thing people understand, okay, stock investors understand one thing. What I'm looking at, okay, Netflix, Amazon, it means if there's lockdown, I cannot go to the shops, right? So there's something there's a company which is gonna be dealing with the deliveries. What is that? Amazon, take a lot, right? What will happen to the stocks? Take a lot, and Amazon and Netflix. They're gonna go high, right? Because they will attract more investors. Because people are gonna be buying online. You understand? Netflix, I cannot go out and see to the movies and stuff, right? So I have to have those things come to me at my place. What I'm going to do, I'm gonna subscribe going Netflix. You understand? That's how it works. You understand? You understand the economic characteristics of that period of time. You look at those things. Okay, guys, I've prepared some few paper clips here because I'd like everyone here to have an understanding of what stocks are when you leave this place. First thing first, you must understand the history of stocks. Now, when I'm talking about history of stocks, the VOC company, which from the Netherlands, were traveling. Remember, back then they were traveling through ships, right? So what were they trading? Barter trade, right? Silks, gold, coins, and so forth. But remember, those things, it's expensive to have such voyages, right? All over the world. So they came up with the concept of, okay, let us attract private investors, private citizens. Private citizens, just like you guys, you take out your 10 rands and put it into what? Into the company. In return, what are you expecting? The profits of the what? Of the company. That's how the stock market was invented. Now, we also have something called IPO. IPO is initial public offering. It's when a company goes public. Remember, when you have your own startup, right, and it's becoming successful, over a period of time, you no longer have the necessary funds to expand your business. You understand? Because now the business is experiencing a rapid growth, but there's a lack of what? Of funds to expand in different ideas. You understand? What you need? You need private investors, right? I need you guys to come into I'm saying, guys, this is my company. I'm having this product. It's a seller of this product, but I don't have the necessary funds right now. You understand? You come with your children, he comes with the children, she comes with the children. You understand? Then we buy the product, we expanded the what? The business. That's why companies go public. It's because they just wanna speed up the growth rate of the company. Because if you have a small pool of investors, it's very difficult for the company to expand. You understand? Okay, that is point number one. The second point is, should I invest or save my money? This is one which people always argue. Be like, this thing, stocks, this is scam. I'd rather go and save my money through the banks. For me, I would advise you not to. I'd rather you invest in a company which you know that in the long term is gonna be growing, right? First thing first, you have to look at the interest rates which are offered by the banks. Then, for case, let's say, I think the best bank in South Africa can offer you annually a return interest of around 8% at best. 8-9%. Now, an index fund, which is, for an example, S&P 500, it's an index fund which basically focuses on the best 500 companies in the USA, right? So now, for me, an index fund is an attraction to invest in. Why? First thing first, it focuses on the best 500 companies in the States, right? Yes. Now, if one company is not doing well, the next one will be doing well, right? And if a company is not performing, it is removed from the what? From the S&P 500. So ideally, it shows that, okay, so there's a stat from 2018 to 2023. The S&P 500 grew, the stock value grew to about 54% in 5 years' time. And then you go and look at the interest rate which is offered by the bank. And mind you, if I have a fixed deposit with the bank, let's say for 5 years, and then I want to break down that fixed deposit, I have to pay penalties. I didn't reach the agreement. With stocks, you are in control. I decide whether I want to leave or I want to stay in the market. So my answer is invest with the stock market. Do not save your money. Saving doesn't work. You understand? Because first thing, another thing, saving, you have to include things like inflation, right? Now, bread is, okay, let's say now bread is 18 rands. You don't know what in 5 years' time a loaf of bread is going to cost how much. So you see the money that you save is it basically didn't do anything. It didn't gain any interest because if it grew by 6% and then inflation is about 6.5%, then it means you didn't pay. Basically, you were not in profits at the end of the day, right? That's why I don't encourage people to save their money. Okay. Point number 3 is trade stocks or hold. Why should you hold? Obviously, this one depends on your objectives, right? Your goals. I cannot say hold for 10 years. I don't know what's your goal with that money, right? You can hold, let's say for 15 years. Let's say you have a child, right? You want to pay the child's tuition fees. I'm going to hold for, let's say, 15 years. I know that if I am talking about a company like Apple, your Amazon, those are companies which are dealing with the new technology, which is for the future, AI, right? I know that those companies are not going to go down in terms of their value, right? Now, I'm going to invest in such. In 15 years' time, I will have a return in profit, right? Cash flow, right? Okay. Now, trading is one thing which discourages people to do stocks. Because you don't really know what you're looking at. Because I'm going to show you why you shouldn't look at the charts. The charts do not mean anything in stocks. Do not look at the charts. Because once you look at the charts, you'll never understand what stocks are. Then, okay? Point number 4, picking your stocks. So, how you pick your stocks, it depends on what? How you look at the value of a company. You understand? Now, a value of a company is something which is very simple to understand by just looking at the company's financial statements. You understand? If you see that, okay, this company is having a revenue of so much, but the profits are in deficit, what do you think is going to happen to the company in the next 5-10 years? It's things which the information is there. It's just that people don't look at that information. It's very critical for you to understand the company's financial statements before you buy the stocks. So how do I pick my stocks? Okay, let's say company A, for an example. Company A has you have valued the company at, so you're saying the company is going to give you 15 million rands in cumulative cash flow. You understand? it's gonna give you 15 million rands over its lifespan. Now, if I'm looking at the company and say the company is gonna create 15 million rands cumulative cash flow, and the company has 1 million outstanding shares. So you're gonna take that number, which is 15 million, divided by the outstanding shares, which is a million, right? It comes back to 15 rands, right? Now, if I value that, okay, one share of the company in its duration is gonna give me 15 rands. So what does it mean? It means that I cannot buy the stock of that company with 15 rands. I will not get my money back. I can only value that the company, each share is going to give you 15 rand over its duration. Now, it will not give me, I cannot buy the stock with 15 rands. I will not make profit, right? So I must be looking at somewhere around 12, 13, 14 rands, you understand? Now I know that, okay, because the stock will be 15, at least I must buy lower than 15 rands. That's how you pick your what? Your stocks, né? Okay, buying and selling. So let's come back to the chart very quickly because I don't have a lot of time. Buying and selling, eh? Now when you're buying your stocks and when you're selling, remember, ideally whether you value the company stock of long term to be 15 rands, right? It's going to give you 15 rands. Now, when I'm looking at that thing, I'm like, when do I buy? Sometimes, when you go to the financial statements, it shows that the company is going to give you 18 rands. You understand? That's a company being overvalued. You know, sometimes social media and all those things can push the stock of a company, right? Now it's at 18 rands. That's when I will sell my stocks. Because they are being overvalued. Ideally, you know the true value is 15 rands. Now it's 18 rands. It's overvalued. I'm selling that. It's a bargain for me. It's demand, right? I'm selling the stock. When do I buy? When the stock is undervalued. Let's say it drops to 13 rands or 12 rands. I know that is not the true value of the stock. It's 15 rands long term. What am I doing? I'm buying 10 rand, 11 rand. I know that I've made how much? 4 rand profit already. You understand? That's how you look at your stocks. Eh? Okay. Emotions and is it expensive? And the emotional side, stocks are not expensive. And number 2, stocks do not care how much you put. You understand? They don't care. They don't know you bought those things. You are in control of them. So people, when they see the value going down, they panic. Like, and they be scared. Stock, be scared. No. When it goes down, what does it mean? The company is being undervalued, right? So it means you have to go back to the market and buy more positions. Because again, it's undervalued. So do not play the emotional game here and say, this thing is a scam and stuff. Be happy that it's going down because it allows you to open more positions on the stock, right? Because ideally you've done the right, you've read the financial statements, you found the intrinsic value of the company, right? You find that the intrinsic value is somewhere between 12 and 18 rand, right? So you know that, okay, if you drop to 9 rand, I'm buying. If you should open more positions because you know that the stock is big and big. You understand? The last point for the day, platforms to invest in, right? There's a lot of platforms. Obviously, the most famous and the one which I like is Easy Equities, right? You could also buy those stocks at JSE. If you want to broaden your portfolio and go in traditional trading.
Yeah, those are guest speakers, both of them. Yeah.
With the FSCA, then if the brokers are regulated, because there's a lot of brokers which are not regulated. You find you invest your money and then your money is gone, right? EasyEquities is regulated, you understand? It's a good broker. And also we have Vanguard and iShares. Then iShares is owned by the biggest company which deals with investment, which is BlackRock. Ne? So you can look up those things, guys. And also, so I've also got a book here. I wrote a book about everything, which is basically it's an introduction. If you are interested in going to the stock market, it's an introduction of whatever I was teaching here. So if you're interested, you can come and look you up with one. It's a very nice book. It was short, but it was nice. Thank you for listening, guys. I really appreciate it. And thanks for everyone coming here.
Thank you so much for that. I've learned a lot in a very short span of time. Investing is very important, guys. Investing is very important. We cannot rely on one financial stream of income, so it's very important to invest. So if you need more information, please kindly also ask to access the book that our speaker was talking about, that he wrote on his own. So it's very important to understand how stocks work, because of the economy revolves around stock, guys. You know, there is a huge cash flow that is involved when it comes to the economy. So I'm going to prepare ourselves for our second speaker, his bio. Oh, okay. All right. As I was saying, guys, investing is very, very important. So please let us get our hands on the book that has been written by our speaker, so that we can also learn a lot about investing. He's still packing. 2 minutes. Okay, no.
So guys, I'm given an opportunity. I think it's a meeting. If anyone has a question here, I don't know if anyone has a question.
So let's say I invested in a company, and maybe let's say I made profits and I want to withdraw the profits. Do I pay taxes on the profits that I made?
So you are talking about in terms of the broker. Do you pay taxes? I don't understand. Okay. In terms of the broker or in the real world, you pay taxes. So one thing I understand is you make profits, right? You want to withdraw your money with the regulated broker, right? So obviously, when you open a trade there, you're gonna have to pay a transaction.